This is the Real Estate Foundation, your show for massive action with proven results. Raise your life and your legacy with real estate.
Are you ready to take your multifamily game to the next level? Well, you need to join us October 12th, Saturday, October 12th, for our one-day multifamily foundation workshop. We're going to bring it to you live. We got a list of 15 speakers. They're going to go through the process of everything it takes to get your mind right, get the deal right, learn the terms, understand the markets, learn how to find the deals, learn how to underwrite the deals, learn how to put your team together, everything from property managers to brokers to insurance companies. Beyond that, what's the proper way to raise funds for a deal and how to close a deal and what to do after you take over a deal. So it's going to be a huge event. It's going to be awesome for you to join us. Got a great space. It's going to be here in New Jersey, in Springfield, New Jersey. Of course, it's going to be a one-day event, but we got everything packed in from 8 a.m. to 7 p.m. Right now, if you put in the code workshop, you're going to get a special discount. And again, that code is workshop. You need to go to multifamilyfoundationworkshop.com. Again, www.multifamilyfoundationworkshop.com, and go fast because we've sold a ton of tickets for this. I actually was able to get a bigger room, but that's filling up quickly as well. So again, www.multifamilyfoundationworkshop.com, put in the code workshop. There we go. Got that down. And look forward to seeing you so we can all take massive action together. Super excited for today's guest. And if the name sounds familiar, it's because we've had him back all the way on episode 236. We have Scott Maurer of Advanta IRA with us on the show today. Hey, Scott, how you doing?
Good, Jason. How are you?
Good. Well, Scott's bearing with me here as I do take 3 or 4, get the marbles out of my mouth. So we're gonna hit on this again, and you're gonna have some awesome feedback coming back from Scott. And remember, go back and check out episode 236. He's gonna give you a great background for what Scott does. But Scott is the Director of Business Development for Advanta IRA. Advanta specializes in administering self-directed IRA and retirement accounts. Scott has worked for Advanta since 2006 and is a frequent speaker and lecturer on the topic of self-directed IRAs and using retirement funds to invest in real estate and other alternative assets. As the Business Development Director, Scott oversees the sales, marketing, and education staff to ensure that new clients receive proper guidance and support when establishing relationships with Advanta. Scott's also worked with numerous individuals and companies to educate them on how to self-direct IRAs can be used in their capital raising strategies. Scott is also an attorney and a member of the Florida Bar, and although he does not give legal advice to Advanta clients. Okay, cool. We got that safeguard in there as well. Good. Well, Scott, we're super excited to have you. You know, last time we covered so much. We talked about self-directed IRAs, and today we really want to talk about fundraising with retirement funds. So, thanks for coming back on. And before we get into this, just give us a little bit more of a recap about the business side of what Advanta IRA is.
Sure. Just a quick recap. What we do at Advanta IRA is we help people who have IRAs, old 401k plans. Maybe they're starting up a new 401k plan for themselves, but we help people who have money in those accounts invest outside of the stock market. I'm sure as people look back over the last several months, they're going to see ups and downs in the stock market. What we allow people to do is get their money out of those markets and into investments that they know and can control. And so much of what we do is in the real estate field, whether it's rental properties, single family homes, rehabs, multifamily syndications, private lending. There's so many different things you can do in real estate. And most people have no idea that their IRA can be used to do that. So it's as an administrator of self-directed IRAs, we facilitate and help people that you find the investment. We'll help you keep that money inside the IRA, keep it tax protected, and hopefully, you're getting out of the market and investing in what you know.
So why aren't more people using this?
Simple reason most people don't use it is that if you have an IRA or you have an old 401k with a brokerage firm, they won't handle alternative assets. And that's a business decision they made, not a legal decision. It's simply they decided they don't want to hold it. So if you have an account with those firms, they're never going to advertise to you that this is possible. So it's incumbent upon you to either do the due diligence yourself and find out about it, or maybe you get told about self-direction from a friend or a financial advisor or CPA. That's generally speaking how people, it's going to either doing your own research or somebody telling you about it, because if your IRA is with one of those firms now, they're not going to independently tell you you can take your money elsewhere and go invest in real estate.
Yep, and you might actually hear, no, you can't. And it's huge that you said that. Is it's not that you can't, they've just made that a business decision is they don't offer this side of it. So like I said, we have, of course, investors who invest in our deals. And they said, oh, well, I can just go ask my IRA provider. And I said, okay, see what they say. And they said, no, you can't, as if it was like an illegal process for them to do this, when in fact it was just that they didn't offer that. And the person they spoke to didn't know, because they had their checklist of questions, basically just saying, oh, can we invest, self-direct in real estate? The answer is no. That's what we have on our placard. No other reasoning or guidance behind it. So in terms of investment strategies, what is some of the most beneficial ways that we can use, of course, the services of Advanta to find real estate investments that may be best suited for us?
Yeah, I mean, I think there's two ways people usually use our service. The kind of the people that we talk to in business development on a daily basis. It's the individual investor that has their old 401k, has their IRA funds that, found that single family home down the street that's available for rent or for purchase, and say, hey, I could go buy that and put that in my portfolio, or rehab project, or that someone who's looking to invest in a large syndication. My IRA could put 50, 100 grand into somebody else's $3 million deal. So we'll work a lot with those individual investors and their particular IRAs to make those investments. And then the clients, come to us, they bring the investment. And again, our role is to make sure it's properly titled. But we also deal a lot with syndicators, other real estate investors who are using other people's IRAs as the source of capital for their deals. So it's not someone using their own money to fund their own project through their IRA. It's actually, hey, I have another rehab that I want to buy, or I have another rental property I want to buy. I'll use Joe's IRA account. He'll lend me the money, and then I'll use that money to make a deal. Or in the case of a syndication, we're raising millions of dollars. Here's one more avenue that people can use, another way that people can invest with us in that syndication. So we again work with people on both sides of the aisle, whether it's the individual account owner to also those people, who are looking to raise capital.
So for people that are looking to raise capital, is there a helpful talk track or some key points that they should make known to a potential investor to help them better down the path of potentially using a self-directed IRA?
Yeah, I think if you're raising capital and you're sitting down with an individual, it's maybe outlining a number of different ways that they can invest with you. And we by no means say that self-directed IRAs is the best or the only way to do it, but it's another tool in your tool belt when you're sitting down in front of a couple or an individual and you're saying, if you're interested in investing, here's my prospectus, here's the rates of return. And here's a couple of different ways that you could invest with me. You could invest with your personal savings account, other funds that you have may be available to you. Or have you ever thought about investing using your IRA or old 401k? Because again, most people, we talked about it at the beginning, don't know this is an option because their money's at Schwab or Fidelity. They've never been told through Schwab or Fidelity that I could invest in real estate, so I must not be able to do it. So it's merely adding that as part of your repertoire when you're talking with people of here's the different ways you could invest with us. And when you say IRA or 401k, that's what will pique people's interest, I think, at times. There are a lot of people sitting on a lot of money in their accounts that they think just has to sit in the market until they retire, and don't realize they can take ownership of that money now and actually do a little bit more with it. So and especially when you're investing through an IRA or 401k, the benefits are a lot of the returns you get come back either tax-free or tax-deferred back into your account. So it's a tax-advantaged way as well of making an investment.
Can you talk to some other advantages if you had the option of course, using, cash in your account or, having an old IRA? Talk to us about some of the disadvantages and advantages from a passive investing standpoint.
Sure. If someone was looking at making an investment, say, let's just use a very simple example, a single family rental property. You're going to go buy a house, rent it, and receive the rental income. Now, if you were analyzing between IRA and non-IRA funds, on the positive side of using an IRA, all of your gains, the income that is generated from the rents, the profits on the sale of a deal, that all comes back to your IRA tax deferred. Now, you're going to eventually pay taxes on that money down the road, but in this case, you're boosting your IRA account. You can compound your money more quickly when you're not paying taxes as you go. The downside, though, with using your IRA, you don't get depreciation and other kind of deductions because your IRA isn't paying tax on that income. So if you're analyzing it from IRA or non-IRA sources, you're going to definitely have some tax considerations and getting a CPA involved. That being said, the one thing we kind of always make sure, one thing to realize, if you have an IRA account and you have $100, $200, $500,000 sitting in that account, unless you want to distribute that money to you personally and pay all the taxes, you're going to leave that money invested in an IRA at some institution. It's a matter of what you choose to do with that money at an institution for it to grow. So you could put that money in mutual funds and stocks and ride the stock market. You could buy that single family rental home and get a consistent income. So sometimes there is a tax analysis that you may say, hey, this isn't the right deal for my IRA. But at some point, you want to look at your IRA account and say, what is the best investment for this money that I have here?
I love that. And so from maybe using a cost segregation standpoint, that wouldn't be a beneficial use here because it transcend or correlate to the self-directed IRA?
Correct. So yeah, certain tax benefits that we get personally or through a business, you're not going to get with the IRA in that instance.
So from a passive investor environment, when they are conducting research about potentially working in a syndication, what if they're working with you, what questions should they be asking of the syndication group, or how should they best prepare themselves to be able to use the self-directed funds?
Yeah, I think when you're investing really in almost any investment that you make through a self-directed account, just note that at Advanta IRA we don't do due diligence, and no self-directed company does due diligence on the investment. So it is going to be incumbent upon you to ask the questions of who you're investing with. Make sure, evaluate the property. Let me see your financials. Let me see your projections. They're involved because when you bring it to us to make the investment, our role is to make sure that your IRA is properly listed on the documents and that you've approved of it. Ours is not to do the background checks and the due diligence on the investment. So when you're looking at those investments, it's very, very important. In an IRA or not, you should be doing your due diligence, running your information on the people that you're investing with.
And from a timeline perspective, say you are actively raising capital for a project and you do come upon an investor who has an old IRA, an old 401k or 401k that they want to roll over. What kind of timeline expectations should one have to be able to see if this can actually meet the timeline of their raise objectives?
Yeah, if you're raising capital, you probably if someone has an IRA, you want to allow for a few weeks, probably to get that account the timing for someone to get an account open, get money transferred in, and then ultimately invest it into your syndication. And unfortunately, the time lapse is simply waiting on money to transfer from your Vanguard account, from your Morgan Stanley account. Some of them are very easy to work with, and we get money within a few days. Others take a little bit longer and can take a couple of weeks. So it's going to depend on who the other custodian is. One of the things we do, if you're working with us, we will let the client know up front. Oh, who you're moving money from. This is their process. This is how long we could expect to receive the funds. I can't guarantee it, but usually give you a pretty good ballpark of how long it's going to take. But you definitely want to allow for at least a week, probably 2 to 3, in order to get it done. And obviously what we try to do on our end is make it as easy as possible for you, make it as easy as possible for your investor. And making it easy is giving enough time for the process to play out properly so that we're not scrambling at the last minute to get documents signed. But when we work with clients over and over again that are investing capital, we come up with a pretty good process and they know it and their clients know it, and it works very, very smoothly, very easily. Like I said, and usually it's a 2 to 3 week process at the most.
So if a new customer comes to Advanta, what are some of the questions that they should be asking to just fully understand the process or better understand the process?
I think the questions they need to ask us up front, sometimes it's more us asking them the questions, but for them is, what do we need in terms of paperwork? And again, that comes from us asking the question really of, what are you investing in? Jason, if I was doing a deal with my IRA with you, it could be investing in a syndication, which then I need your private placement subscription documents. My IRA could be providing you with a mortgage loan. In that case, we need to see a note document or a mortgage document with the IRA reflected. If I'm buying a property from you, I need to be able to see a contract in the name of the IRA. So that's kind of the important thing, is really for a client up front, is giving us that information of what you're investing in, and we're going to of course ask and prompt that question. But that's a good question up front is, if I'm going to make this investment, what do I need to provide you as far as paperwork? And what's the process going to be going forward? Again, some investments, you just get a monthly or quarterly distribution check, and there's not a lot for you to do on a monthly basis. But if you are buying, say, a single family home, how is Advanta process the checks to pay expenses? How does Advanta handle the income coming in? And we will go through that entire process with you, give you the different options that you have.
And from a self-direct custodian perspective, not all companies, of course, offer this. If someone, for some reason, doesn't reach out to you, but reach out to another provider, what are some questions they should be asking of that provider to make sure they meet the muster?
Well, I think asking kind of what, ask them to go through their process. If I'm making an investment, how long is it going to take to get my account open? How long is it going to take to get my funds? Will I be working with one person in your office for the entire transaction? What happens after my purchase is made? Do I have to deal with other people at that point as well? And really getting an idea from them on what their back office work is like. How can I get bills paid? Do I have to fax in a bill, or can I simply go into your online portal and ask for an expense to be paid? That's another good one to ask. I can say at what we do at Advanta, we try to give everybody one account manager, one person, one point of contact to make it easy. So I think that's important to ask, is how they handle it. And even still, what educational support, what kind of feedback can I get from my account? Do I make the purchase and then you don't answer the phone again? Or is it, can I call you with recurring questions on a daily basis for things that are going my account? And we understand that self-direction is new to most of the people that come to us. This is a brand new concept. As we're talking, most people don't know it's possible. When they come to us, they're going to have those basic questions, and even after they make their investment, something's going to pop up in their head a week later, or 2 weeks later, or 2 years later, and say, I need that question answered. I'm not sure. Call us, and then we're happy to walk you through, get you the right answers, or get you to somebody who can give you that answer.
Yeah, and that's huge, right? And you hit the nail on the head. Like, the process is so huge, and having that point person that is going to be your point person for your account is huge. I was just going through this. I had to get involved on a laundry contract issue, and I'm on like my 7th person. I'm like, how is this so difficult? Who's our point person here? And
Right.
Each person knows up to one step, and then at that point, it's like they're all trying to complete a sentence, and they all know like 3 words of the sentence, kind of effect here. And so I've been going through that. And just having one point person, that's what you need, because it makes you feel confident you're going to be able to get the right answers, and the story's not going to change each time you come back to that story.
Exactly.
Now, I want to transition a little bit here. So we touched on it slightly in the past, but let's talk a little bit about solo 401ks, solo 401ks, how we can use that in our process, and what are the advantages of that?
Sure. So, at Advanta, we do obviously administration for self-directed IRAs, but we also do offer the solo 401k plan as well for people who own their own business. The solo 401k gives you the ability to make larger contributions on an annual basis. So with IRAs, you may be limited to $6,000 or $7,000 a year that you can put in out of your pocket. If you own your own business, you can defer upwards of $55,000, $60,000 a year into a 401k. So some great tax savings for you as a sole proprietor and business owner. Additionally, you can borrow from your 401k. You cannot borrow from your own IRA account, but that is one difference. And then if you're investing your retirement funds into leveraged properties, or you're investing your retirement funds into a business, there is a tax called UBIT, unrelated business income tax, that can apply to IRA accounts if an IRA is involved in a leveraged or mortgaged real estate deal. So if you're investing into, say you make a down payment on a property and you get a mortgage for the balance using your IRA, IRA is going to be subject to that tax. Or if you invest in a private placement where there is leverage involved, your IRA can be subject to that UBIT tax. Solo 401ks are not subject to UBIT tax in those scenarios. So if you are looking at placing your money into leveraged properties and leveraged investments, your 401k will cut out that UBIT tax issue. Again, doesn't come up often, but for leveraged real estate deals, it does. And that's a huge benefit that the solo 401k has. And if you own your own business or you have a side business that can justify the establishment of a solo 401k, it can be a no-brainer in those situations.
Hey, can you talk to a point, and I'm not even sure you know the I'm going to put out there, that where you can see from an IRA perspective investing where UBIT could be triggered?
UBIT can be triggered in an IRA again if there's leveraged you invested into a leveraged real estate deal. So your IRA, you'll see single family home, your IRA puts down 40%, you get a mortgage for the balance. You're going to have a UBIT issue. If your IRA, not really in the real estate realm, but if your IRA invested into like a private equity fund or a private placement that is an ongoing business, if you're investing in the restaurant down the street, they're sending back to you business profits each month, that can trigger UBIT to your IRA account. It's not a determination that we make when we set up the investment. It is up to you and your tax advisor to see if it's going to apply. But again, the good thing is if you have a solo 401k, one of the benefits, you don't have to worry about it. But for an IRA, it is something to think about. Again, we're here as a resource. We're just not going to tell you. We're not going to file the tax return for the UBIT, and we're not going to tell you that yes or no, it definitely applies. That's a question for a CPA.
Great. Okay. I appreciate that. Yeah, because there's always some questions that outstand about UBIT there. And of course, it comes down to the tax professional really leading the charge about what can and what can't be done without tax implications. So I do appreciate that. From the solo 401k perspective, if there is a business owner that has the chance or opportunity to self-direct an IRA or do a solo 401k, is there any other advantages to one or the other besides the UBIT, of course, approach?
Again, I think for the solo 401k, it's the lack of UBIT that makes it an advantage. It's the ability to take a loan from it. There's the ability, again, to make a much larger contribution annually. So if I'm a business owner and I'm killing it one year, I'm probably trying to figure out a way to not pay as much income tax that year.
Yep.
By setting up a solo K, I can defer a larger amount of my income that year into the 401k and get a bigger tax write-off. Also, if you're looking to put money away tax-free, you can set up your solo K to have a Roth component. So the monies you put into that Roth portion of the 401k ultimately are going to come back to you completely tax-free, along with the earnings that are attributable to that. So that's another huge component for high earners, individuals over a certain income threshold. You cannot contribute each year to a Roth IRA. There are limits there in putting money in that type of tax-free account. But if you're a small business owner, you own your own business, and you're out there killing it, you can put in up to $19,000 a year tax-free into a Roth IRA. Or I'm sorry, Roth 401k. Yep.
Awesome. So, and from a perspective of Advanta, talk to us about the company itself. What's the company motto?
I mean, our company is invest in what you know and take control.
Right.
And again, we don't sell investments, so we're not trying to push anyone in any particular direction. But the common theme from the people who invest in single-family rentals, to people who invest in multifamily placements, to people who buy gold and silver, or do private notes and mortgages, the common theme is that they have come across an investment opportunity that they feel more comfortable with, maybe in the stock market, or that they've been doing personally for years and are just now discovering that, hey, I could also use my IRA to make the same investment. So we're enabling them to basically take that money and not put it, I mean, you always hear the joke about the proverbial dartboard for the stock market. Just throwing a dart and seeing what you get. And a lot of people, that unfortunately is a reality. They're just not sure that why the stock market might have dipped 500 points last week or why it went up 500 points the next day. But they do know that they can get a certain amount of income from a rental property, from a private placement, and they understand that and they know that. And so we're enabling them to like I said, investing in what they know from that perspective.
Yeah, and this basically sums up everything we have right here in the podcast. Invest in what you know and take control. I love that. That's awesome, Scott. Scott, for listeners that want to hear more about you, find out more about the company, where's the best place to find you? They can get the resources they want to know about potentially using your services.
Just very simply go to advantaira.com. That it's Advantage without the GE, so ADVANTA. IRA.com. We have a wealth of information on that page. I would also encourage, if you go to our homepage, go to scroll to the bottom. We have the social media little icons. Click on the YouTube. Go to our YouTube page. we archive all of the webinars that we do. We are very big proponents of education. We have a lot of guest speakers on at different times on different topics related to self-direction. All of our webinars are archived. They're free to watch. Click there, and that's just a great place to go for information.
Oh, that's great. Well, Scott, we really appreciate you coming back on the show, giving us all this awesome knowledge.
Great. I appreciate it, Jason. I'd love to be back.
Good. Definitely have you back in the future. And again, this is Jason with the Real Estate Investing Foundation podcast. Huge thank you to Scott Maurer. Thank you to you, all the listeners out there. Have a great day. Bye now.